Hello all, welcome back to another video. My name is Adam and today I'm going to be talking about 3 penny or growth stocks to buy December. Let's get right into it. The first one is Electromechanica Vehicle Corporation, ticker symbol SOLO, and it actually started trading on the NASDAQ in September of 2017, okay? And we can see it had this huge rise by close to 400% and then back down where it was trading at around $2, $1 to $2, and we can see this meteoric rise again, all the way up close to 700%, but then it fell back down to like 36%, right now sitting at $6.85. And I think my price point for jumping in is anywhere from even the $4 to $6 range, and I'm gonna explain why. So they're involved in the EV space. And this is really going to benefit them now that Biden is president, or should I say president-elect. But of course, most likely he's actually going to be going into office, and he plans on putting out a $2 trillion plan for environmental things. And one of the things that he's going to push for is, of course, electrification of vehicles, right? The move away from internal combustion engines, all right? So they make a quirky three-vehicle car. Well, they also have two-seater vehicles, but their main attraction is, of course, the Solo, which is, again, this kind of car. And, the main argument against Solo is, who's going to drive this thing, okay? Like, look at it. It's incredibly small. It doesn't look very safe. However, the other side of that is it's safer than a motorcycle, and that's what it's sort of catering towards, more of like a motorcycle replacement if you're getting to that age where you don't feel comfortable with riding a motorcycle anymore, okay? And it's a way for people to commute to work because generally when people commute to work, they're alone in the car, so they don't need a big car, right? And of course, it's electric, so which is just pretty much the cherry on top, right? So it's sort of disrupting the industry where workers commute to and from work just in singles, right? So that's what they're doing with the Solo. They also have the Tofino, which is again a very very interesting sports performance like car. You can see, of course, their stats here. Nothing like a Tesla car, but again, it's very very interesting, and it looks pretty damn cool. Okay, and finally they have the E-Roadster. And again, kind of more like a hip way of traveling, and again, catering towards um, very unique population, right? So very interesting product. And again, the main argument against or the bearish position is that not many people want to buy these Solos, or mainly because it's quirky looking, it's not very safe, and even if you have a three-wheel car, you don't even have to do crash testing with it, unlike a four-wheel car that is mandated to undergo crash test testing. But again, that's not the point, right? The point is to offer a low expense vehicle to commute to and from work, and not a very long distance, right? And maybe even avoiding highways, right? So here they talk about the evolution of Solo, sort of that pipeline there. They go on, they talk about their technicals. But one thing I also think that gives Solo its true competitive advantage is the price point and the total cost of ownership. So we can see the total cost of ownership is close to 40,000 for Solo, which again offers a premium of 39% over the next best competitor, which is the Mini Cooper of 53, close to $54,000. Okay, and of course you can pause here and compare all these price ranges. All right, so this is really interesting, right? It's offering a low cost alternative to electric vehicles if you're just driving in a one-seater, okay? And of course, that's our main attraction, right? So this is why, of course, I like Solo. And of course, another point is that many of these EV stocks that are out right now don't even have a proven vehicle, right? What I like is that Solo is actually delivering vehicles, and they have proven vehicles on the road already, okay? So if we're going to look at their third quarter results, first they said third quarter of 2020 brought with it a number of key milestones, but none more notable than the start of production of our flagship Solo electric vehicle. Okay, and again, you can look here, but what I want to point out is total revenue in the third quarter of 2020 was 0.3 million, or 300,000, compared to 200,000 million in the same year ago quarter. So again, it's not an impressive amount of revenue growth, but at least they're increasing their revenue growth. and they attribute that to an increase in custom-built roadsters that were produced year over year. However, to note is that they also had an increase in net loss in the Q3 of 2020 was close to 15 million, as we can see here, compared to a net loss of 5.3 million in the same year ago quarter. Okay. And again, this is concerning or would be concerning, but again, you have to understand that they're a newer company. They're, investing in research and development. They're trying to scamp up production. They're trying to build newer facilities in the US, especially, for example, in California, where their main, it's like now trendy to do things differently. And of course, Solo is a very different car. But of course, they also raised uh, about $100 million in September. So that's going to fund them through, the period where they're ramping up production. Okay. So yeah, that's what I have to say about Solo, and you can pause and read their other expenses right here. But again, it's nice to see that they're increasing revenue, they're planning on ramping production, and again, this seems like overall a company that I would be interested in investing in, because they don't try to hype up their price in any way by manipulating the market, and or for example rolling a truck down a hill, even if it doesn't power itself. Nicola. Okay, so let's move on to the next one. And this next stock is Apex Technologies. Okay, and I was saying that I would move into the stock, and I'm still not in this stock yet, but I'm considering it if it moves even a little bit lower. Honestly, I should even put money at this price point because it is a very good company that I do believe in. All right. So this, by the way, is a SPAC, and this is a company that's going to reverse merge with AvePoint Technologies. Okay, and this way it allows it to go onto the market, trade under the Nasdaq without having to IPO. Right, so it's a more efficient way of IPOing, and it's associated with less fees. Okay, so first let's take into account market cap right now of this SPAC is 632 million, and if we go on AvePoint, we can say, of course, they're collaborating with Microsoft. That's the first thing to note. And what I like about this company is, again, this is a company that already has recurring revenues. Okay, and its main partner is Microsoft, which is, of course, a huge partner. Right, Microsoft is like one of the very few companies that's has a market cap of over like $1 trillion. Okay. Um, so let's read about the acquisition. AvePoint is to combine and create a publicly listed company with a 2 billion market cap. All right. And as we can see here, we can see that Apex public shareholders and founders will have a 21% stake in the publicly traded company, right? So if you work the math out, and it's like, a fifth of, 2 billion represents $400 million, whereas the market cap of this stock right now is $632 million, which represents a 1.5% premium of what you have to pay to what AvePoint is saying that their company is worth at to around $2 billion. Now, this is not bad compared to some of these other companies like NBAC or like CIG, the company that's merging with a rival, right? So what I'm saying is this is technically even considered a discount compared to some of these other companies that are trading like 3 or 4 times of what their market value is proposed to be once they are publicly listed. Okay, so let's look at the company overview for a second. Of course, it's AvePoint is the leading data management solutions provider for Microsoft Cloud, which is again a growing business. Okay, it has over 7 million users that again are using the cloud, which of course is using AvePoint as their data management solutions partner. And what I like again is it's already established, right? So this is of course a growing company, but what I like to see is security, and this company has security. We can see it has over 1,300 employees in 29 global offices, and a registered user base of over 7 million users. Okay, and again, anything that's partnering with Microsoft isn't going anywhere. Is something that I feel comfortable with investing in, right? So what I like is that it's sort of a startup company backed by these huge companies, right? Of course, Microsoft, right? So you're able to invest in this company, which has a tremendously high revenue growth, but it's also backed by, again, a very stable business model at the end of the day, right? So we can see it's expected to have $148 million in revenue in 2020, 30% revenue growth, and again, newer capital to invest in its products, right? So what they're saying is that, all organizations need help managing their data, okay? Because the amount of data is growing fast, and you need to, of course, protect that data with, privacy, cybersecurity risks becoming larger and larger, and of course, data governance, knowing like who can access this data, when to alert the person, when to delete the data, and how to audit it. So this is becoming an increasingly bigger problem, especially during the pandemic when most things are happening online. Okay, so the only part that I can see why this company will have low revenue growth in the future is because, of course, the vaccine is just on the horizon, thank God. However, what this means is that maybe less people will be using the cloud, right? I don't think so. I think this is a transition. The pandemic has associated a transition to more an online landscape, but I don't think it's going anywhere anytime soon. And I think that the user base will grow despite people not having to, of course, quarantine and stay at home. Okay. And one thing I did want to look at is, of course, their financials. So in 2019, we can see that their revenue increased from 75 million in the quarter all the way to 90 million, right, over 4 quarters. So that's impressive revenue growth, right? Like 18% revenue growth, 19% like quarter over quarter, which is quite insane. All right, and we can see in 2020 they produced 95 million, and then 2020 second quarter produced 101 million. So these are really really nice numbers, and we can see, of course, revenue growth is expected to be 29% compared to 2019, and for 2020, the total expected revenue growth is expected to be 26% above 2019 levels, which is, again, double-digit revenue growth is very impressive. 2021, it's expected to, again, increase by 30%, and 2022, $257 million, which is a 33% increase from 2021, right? And they're also expected to increase their margins. And again, these margins are already incredibly high at 69%. But of course, with economies of scale, and over the quarters, as they get more developed and they have more users, each dollar of revenue is going to go directly down to their bottom line. So in 2022, they're expected to have 74% profit margin, which is really, really good. Okay, and the final company I want to talk about is a play on water. Okay, now arguably, water is one of the hottest commodities out there. Okay, I mean, without water, everything else is worthless, right? Like, we wouldn't be alive without water, right? And water, for example, by the way, I have to disclose that, of course, I own shares of H2O Innovation. I don't own shares in any of the other two companies, but I do own shares in H2O Innovation. And this to me is like a 10, 20, 30 year long-term play, okay? And this company is H2O Innovation, ticker symbol HEO. It lists under the Canadian Venture Exchange. And we can see right now its current market cap is $151 million. And this past quarter, they actually broke even. And we're going to go over that. But again, before we do, I just want to say, water is definitely going to be one of the main problems in the next 50 years, okay? So more than 2 billion people lack safe drinking water, and this number will only grow. And here's a nice description of, what the total population of different countries are and how many people are in these countries without clean water, right? So of course, this is an existing problem, and this existing problem will just continue to grow into 2025 and beyond. Okay, so what this company does is, of course, like stuff like desalination plants, water solutions, providing technological solutions to water utilities companies, stuff like fire hydrant installation, right? So we can see here their first quarter 2021 highlights based on the fiscal year. Their revenues reached 35 million, which were up 24% compared to 28 million a year ago. Okay, so that's very, very impressive. And they actually eked out a small profit of $1 million compared to a net loss of $1 million in the previous year. Okay, so I really, really like this. And again, their gross profit margin was 27.1%, an increase of about 5% or 4% compared to 23% last year. Okay, so Again, some of their highlights, they were awarded six new municipal and industrial projects in North America worth $17.8 million. Um, and again, they also have recurring revenue, okay? And one of their pillars is specialty products, which we're not going to technically go over, but I just wanted to mention that. Their third pillar is operations and maintenance. Of course, their first pillar is water technology and services, okay? So again, they also have recurring revenues, and again, you can pause this to look at how their recurring revenues change over time. But I like how the majority of revenues are now coming from recurring stuff that's happening quarter over quarter, that they're getting paid out time over time. Okay, and so it's a very, very solid business model, right? And again, if we're looking at their earnings, they beat earnings for the past two quarters. And we can see finally in the quarter that their past two quarters, they produced a profit, which is actually very, very impressive considering that this company is so small. Okay. And annually, we can see, of course, revenues are just going up over the past 4 years, something that I'm really looking towards when I look into a company, right? So this is a fast growing company with a profitable business model, right? And I believe it'll even become more profitable, and there'll be higher demand for these services, of course, as fresh water runs out, okay, and stuff like desalination plants will have to be manufactured, all right. And I mean, I believe, I just want to end off with one of the quotes in The Big Short. The dude, I forgot his name, the main character, that shorted the housing market. At the end there was a screen and it was saying like the only company that he was invested in now was the commodity of water. Okay, so I mean, I said that really badly, but it is what it is. But lastly, I just want to go over the technicals of H2O, and this will determine whether or not you will have a buying opportunity. And if we're looking at, let's just say the 3 month trend, we can see that the MACD is merging lower, getting closer and closer to zero, but not necessarily. We can see even there might be an inflection point here. So it doesn't look like this company is necessarily going down or going up. It might be stagnant for the next little bit. And the relative strength index at 62. This means that this company is going more towards the overbought side, but still within the range from 20 to 80. 20 indicating the oversold indicator and 80 indicating the overbought indicator, right? So you might want to wait for a dip before you get into this position. But again, I really like this company and I will be holding this position for quite some time. Okay, so yeah, that's it for me. Let me know what you think about these three companies. These are my three picks that I'm buying for December. These are high growth penny stocks. Again, please do your own due diligence, do your own research. Again, know that I'm not a financial advisor. This is just my investment advice, and I make these videos for fun. If you did enjoy these videos, please be sure to give it a thumbs up and subscribe if you haven't already. And there's a bunch of links in the description below if you want to check them out. And feel free to reach out to me at any time. Take care, guys, and I'll see you in the next one.